I'm here in Tampa at the Republican convention to talk about the corporate income tax. I was interested in what you said in the previous segment. I'm actually the co-chair of a group called the RATE Coalition. That's Reforming America's Taxes Equitably. And since down here in Tampa, I've been having some fun. I don't know if you can see it, and I've got a red foam finger like you have at baseball games and so on. We're number one. That is, we're number one in terms of having the highest corporate income tax in the developed world.
In theory, we're not number one in actual tax collections, though. We're like something like 38 in tax collections, as you know.
Well, we are way higher than the OECD average, that's for sure. And the fact of the matter is that if American corporations face a 35% marginal tax rate when they think about new investments and they decide whether to move, you were saying earlier, right, corporations are moving overseas. The Eaton Corporation.
Yeah, these corporations, they don't give a rat's ass about America.
Well, maybe not, but what you and I care about Cleveland.
I care about America. I am a patriotic American. I will pay my taxes. I will keep my company here, and I'm not going to move offshore just so that my CEO can jump his salary from $500 million a year to $900 million a year.
Fair enough. But what do we do then about the fact that when I was born, back in 2 years after I was born in 1958, in 1960. The U.S. had 17 of the 20 largest corporations in the world headquartered in the United States. Now we have 6.
But in 1960, you realized that 32% of the total income, the total federal income, was from corporate income taxes. Right now, it's 7%.
Right, and what's happened is the world has globalized, and it's now plausible for an American company to think to themselves, gee, do I want to be in Canada where the rate will soon be 15%? Do I want to be in the UK where it will soon be 23%? Do I want to be in Ireland where it's 12.5%?
Right. So isn't it time for us to stop saying let's race to the bottom and start saying let's go back to what Alexander Hamilton proposed in 1791, that was adopted in 1793, and that stood until the days of Reagan, which was, policies that actually protect the U.S. economy. China's doing it. Taiwan's doing it. Japan's doing it. South Korea's doing it. Brazil's doing it. Brazil just passed a law that said that on any cell phone, any smartphone that's sold in that country, there was a 50% import tariff if it wasn't manufactured in Brazil. What happened? Foxconn, the company that makes Apple's phones, built a factory in Brazil, and they're employing thousands of people. Brazil, these countries are smart, and then here in America, we've got you and the guys of the Republican Party are running around going, oh, let's just cut taxes and have a race to the bottom. There's always going to be a country with lower taxes.
Well, the question is, do we want to be triple Ireland?
No, the question is, do we want to have rational trade policies?
Well, look. You asked me what I'm doing down here, and I'm doing this point on the corporate tax, and I'm saying that. For example, in 2000, your point about trade doesn't really speak to why corporate headquarters move around. In 2000, the United States had 179 of the top 500 corporations in the world. Now we have 133. That's not a trade issue. There's nothing stopping Company X from moving their their manufacturing to China.
Well, most of these corporations have hundreds of offshore divisions to begin with. I mean,
when the corporate headquarters moves, the city, the state, the U.S. economy as a whole loses those jobs. And so I think you just have to realize that in 1986, when President Reagan and the Democrats in Congress worked together to cut the top corporate rate from 46 to 34, the OECD average is 50. Now the OECD average is 25. They've cut their corporate tax rate in half, and we have actually pumped.